Good afternoon, everybody, and welcome to the 8th virtual Crawford Lunch and Learn, hosted by Graham Peters, who has been running this program for, we just discussed, some 18 years for the education of the industry and our people. So look, without further ado, I'm going to hand over to Graham. He's going to cover in this Lunch and Learn the topic of COVID business interruption and explore an update on the UK court case, the progress of the Australian court case, and we're going to explore some of the issues that we see on the horizon. So Graham, welcome, and over to you.
Okay, thank you, Angela, and many of you here will have attended our prior sessions that we've been looking at COVID-19 business interruption claims. The first of those we held in about February, March last year, and the later one looking at the situation as the year rolled on. There are obviously issues associated with business interruption flowing from COVID-19, which are popping up in many jurisdictions. The United States has comparatively little impact for us, but there has been cases in the United Kingdom, also in Ireland, which I'll touch on, and most relevant for us is obviously the cases that are running in Australia, and there are 3 relevant cases there, of which we'll discuss 2 today. The issues that are being examined is issues over policy response, the operation of policy exclusions, and the basis of calculation of loss. United Kingdom test cases came on most quickly, and I think there are about 9 separate insurers tied up on those. These are still subject to further clarification, although judgment has been given initially in the High Court and then referred to the Supreme Court. So the order of the courts is different in the UK to Australia. So in Australia, we would be going from a Supreme Court appealing to a High Court. In the United Kingdom, it's an appeal from a High Court to a Supreme Court, just to make it complicated. The Australian test cases, the first of those is an issue around the application of exclusions related to cancelled legislation, and insurers lost comprehensively in a 5-0 decision. That is currently sought to be appealed to the High Court. And test case number 2 has just been filed. The first management conference was held yesterday. United Kingdom test cases looked at the COVID-19 pandemic and the government controls imposed as a result of it. These lead to widespread disruption in business closures, and they are continuing to do so. I've got a daughter in the UK and we can't get back to Australia. She's basically housebound at the moment. Businesses suffered a significant level of financial loss, particularly for SMEs, small to medium enterprises, and many businesses made claims of loss under their BI policies. In May 2020, the FCA announced it was going to bring a test case to the High Court to resolve some uncertainties, and 21 lead sample wordings were identified from 8 insurers. I'll just take a diversion here because a question asked by Chris Eckerberg of momentary blank where Chris is now, so sorry about that, Chris. But Chris had asked about the issue of whether COVID-19 could be construed as a damage matter. This minor case in the UK was KC London and Allianz, and it was a cafe that was close as a result of the nationwide lockdown, claimed on the principal business interruption policy, which is arguing that it was a result of the consequence on damage. There are no BI extensions. The BI definition talked about loss resulting from interruption or interference, and the event was defined as accidental loss of destruction of or damage to property. The High Court concluded that loss of use is not equivalent to physical loss of property. So that was an important distinction, but something of a sidelight to the main action, which is associated with the examination of those 8 insurers' different policy wordings. Heard in July 2020, Court was asked to consider 3 categories of non-damage BI wordings: a disease wording, a hybrid wording, and I remain a little uncertain as to whether they use the word hybrid, and prevention of access to public authority wordings. Critically, there are 2 action groups: the Hiscox Action Group, which has about 450 members, and the Hospitality Insurance Group Action, and both of those were invited to join or intervene on behalf of certain classes of policyholders. A judgment was handed down the 15th of September, and then there were issues that flowed from that, which resulted in it being taken from the High Court to the Supreme Court. There had been prior agreement that a leapfrog application could be made to the Supreme Court without necessarily going through an intermediate step. And there's an analogy here in that the cases in Australia were initially heard at the New South Wales Court of Appeal rather than initially being heard before a single judge in the Supreme Court and then referred to appeal. So it was recognised by the industry and by the courts that these are pretty significant matters and they need to go to a higher court early on. After the High Court action in the UK, there were discussions between the Financial Conduct Authority and insurers on the interpretation of key points, but they weren't resolved. The High Court granted certificates to Australia. The Australian equivalent would be leave to appeal to the High Court, the FCA, 6 insurers, and the Hiscox Action Group to take their appeal to the Supreme Court. The court rejected an application by Qatar Insurance Corporation, Europe, which is a Qatar-based insurer, to become a party to the Testo case at that appeal stage. The Supreme Court then heard the case 16th and 19th November and addressed about 6 issues. One of them was the diseases clause. Secondly, prevention of access stroke hybrid clauses, the issue of causation, trends clause, pre-trigger losses, and the Orient Express Hotels decision, which actually interlinks with the trends clause. There is no appeal on the questions of prevalence or proof addressed in the prior High Court's judgment. In the High Court's judgment. Judgment was handed down about 2 months ago, and everybody's now trying to figure out which way is up. The High Court discussions had discussed prevalence and proof of occurrence of COVID-19 was defined within a specific geographical area. The burden of proof remains on policyholders to prove the presence of COVID-19 within the relevant policy area. So it's still necessary for an insured to prove that an event has occurred. So that's no different to the situation in Australia. But there are issues here about proximity, which we'll come back to later. The following evidence could be used as, in principle, to discharge that burden on the policyholders to prove the presence of COVID-19 within the relevant policy area. Specific evidence of a case of COVID-19 in a particular location within the relevant policy area, and a lot of these are subject to 25-mile limits online. National Health Services or Office of National Statistics death data detailing a death within the radius, UK government published data, or a distribution-based analysis. Now, this one I'm not sure what it is, and likewise the undercounting analysis, I'm not sure exactly how to interpret that and what the implications into the Australian context would be. Insurers concluded that absolute precision is not required, but rather that there's a sort of a proof that something has occurred in the proximity. Evidences per prevalence will vary according to particular timing and location of the claim, and that's going to have implications in Australia because the distances between towns, etc. in Australia is obviously greater than in the UK, and there is not the same concentration nor the very high number of cases in Australia where there has been in the UK. The disease extension typically talks about occurrence of a notifiable disease at the premises or attributable to food or drink supplied from the premises. Discovery of an organism at the premises likely to result in the occurrence of a notifiable disease, or occurrence of a notifiable disease within a radius of 25 miles of the premises. And there's a similarity here to some of the clauses that we see in Australia, for example, shark and crocodile attack, which is one of my favourites for Suncorp and Northern Territory insurance policies. It's actually identifying where a notifiable disease outbreak has occurred within a radius of the premises. Insurers' position was that the losses were only covered to the extent it could be shown that they resulted from the occurrence of the disease within the radius. So insurers were arguing that losses which stemmed from some wider area damage were not covered. Insurers argued that if but for the local disease, there would have been the same interruption or interference, there could be no cover. So what they're effectively saying is, if this local occurrence had not occurred, there would still have been damage flowing from shutdowns, etc., in some wider context, and we are not going to deal with the claim because the but-for test would have said that you would still have suffered a similar sort of damage. The High Court judgment actually said the insured peril is a composite peril of the interruption or interference with the business following the occurrence of the notifiable disease within the defined radius. It's not about identifying cover only to those within the defined radius. It includes diseases which can spread rapidly, and it wouldn't make sense for cover to be confined only to the effects of a natural occurrence of notifiable disease. And there's a discussion around event and incident, whether it's specific, localised, etc. There's also consideration, and this has an impact back to the Australian reliance upon the epidemic and disease exclusion, or reliance upon the 1908 Quarantine Act. The UK High Court held that it doesn't exclude claims arising out of the COVID-19 pandemic, but cover is only available for BI consequences of notifiable disease, of which there's been at least one incident within the specified radius. So I'm sorry that at this stage, a lot of this is essentially just talking to the points here. I'm trying to make the notes as comprehensive as possible so that they are a useful resource after this presentation. When the case then took to the Supreme Court took a narrower approach to identifying the insured peril or trigger. The court agreed with insurers to an extent, in disregard of the High Court, that the insured peril was the individual occurrence of notifiable disease, rather than the disease as a whole. But it ultimately reaches the same conclusion as the High Court because of their analysis of causation. They again rejected the epidemic and disease exclusion as it was discussed in the High Court, but also rejected the event/incident interpretation and deemed there was no different to other disease wordings. So the Supreme Court agreed with the High Court that the disease clause provides cover for business interruption, provided there had been an occurrence with a specified radius of business. So a different logic, but arriving at the same conclusion, that the disease clause provides cover for business interruption, provided there had been an occurrence within the specified radius of business. You can understand in the UK, you've got fairly population of 56 million in a space. I think it's physically about the size of 1/3 of Victoria. So the people are a whole lot closer together. In Australia, we have a concentration of population down the eastern seaboard, but we tend to have much bigger spaces in between. We then moved on to the issue of prevention of access, and the typical wording talks prevention of access to the premises due to the actions or advice of a government or local authority due to an emergency which is likely to endanger life or property. Now, the prevention of access in the High Court was construed more restrictively than the majority of the disease clauses. So it talks about emergency, danger, etc. within a restricted area. So it's something specific which happens at a particular time in the local area. So it's intended to provide a much more narrow and localised cover. In Australia, prevention of access, typically we'd be talking prevention of access in the immediate vicinity, and we have arguments. The best I've dealt with was an argument that was a prevention of access because of a bushfire at Bunyip, Victoria, which is about 50 kilometres out of Melbourne, and that was supposedly interrupting access to Omeo, which is about 400 kilometres from Melbourne. The insurer, not surprisingly, didn't pay on that occasion. One aspect which is discussed here and on subsequent pages is going to have an implication if it's similarly interpreted in Australia, because prevention of access or local government action has been construed fairly quite tightly in Australia for things like bushfire evacuation notices, more commonly for cyclone events, where governments provide cautionary or precautionary sort of warnings and ask people to evacuate, but rarely outright issue an actual direction to evacuate. So if you can remember the bushfire events last year, where there was state of disasters declared and state of emergencies, that was unusual in Australian catastrophe history, that there was direct actions being given, direct orders being given. So that's unusual. More commonly, there is used by government a threat of action, not the actual action of itself. So the prevention of access was described as imposed by order. It conveys a restriction that is mandatory, not just advisory. So this is the conclusion at the High Court. Prevention of access, as opposed to hindrance, had to have been a closure of the premises, and interruption does not require a complete cessation, disruption or interference. Then we have a hybrid type wording: loss as a result of closure or restrictions placed on the premises as a result of a notifiable human disease manifesting itself at the premises or within a radius of 25 miles of the premises. It's a similar approach to the disease part court. It's not just losses flown from a local outbreak. However, as with the access wordings, the court has construed the meaning of restrictions imposed and inability to use fairly narrowly. So this then goes to the Supreme Court. Pardon me. The issues considered were the nature of the public authority intervention. So what did the public authority do? And nature of the prevention or the hindrance of access or use required to trigger the clause. So there's no appeal on the emergency, danger, disturbance, injury in the vicinity and within 1 mile of the vicinity. High Court had considered this to provide narrow restrictive covenant, and vicinity was said to connote a neighbourhood, and accordingly only where the action of the relevant authority would have been responsible as occurrence of the disease and action taken. So that was the decision of the High Court. Then the Supreme Court agreed with the High Court that restrictions imposed would be understood as ordinary meaning mandatory measures, but did not accept that the restriction must always have the force of law. And I'll use the example here. We reasonably frequently receive claims for nursing homes and the like that suffer some sort of closure as a result of an outbreak of norovirus. It seems to be the one which is occurring one. And there is differential interpretation between insurers and between the officers of the same insurer as to how they interpret the mandatory requirements there. Now, the relevant health authorities actually have the ability to close and do things to shut businesses down for a short time, but do not do so as a matter of course. So more usually, there is a persuasive action to actually lean on the operator of the nursing home without actually requiring the actual intervention of the government agency. But it's always done almost to standing there holding a big stick and threatening that if you don't actually implement these actions voluntarily, we will actually move to apply some sort of regulatory action. So in a literal sense, there is not a restriction imposed, but somehow or another, they are imposed. So the court has held that restriction imposed if it carries the imminent threat of legal compulsion, is in mandatory and clear terms and indicated compliance is required without recourse to legal powers. So, pardon me, the nature of the prevention or the hindrance of access requires the following to trigger the clause. It requires an inability to use, and that can include an ability to use the premises or a discrete part of its business. It requires prevention of access, stopping something happening or making an intended act impossible. That's a distinct from hindrance. That could include an inability to use the premises for a discrete part of its business activity. It requires interruption. So the court has rejected that this implies a stop or a break to the business, and that interruption could be as an interference or disruption. So it's not just that it requires closure, it could be that there is an interference or disruption, not necessarily complete cessation. And you can see how this interpretation, if it was important to Australia, would have an implication for us around cyclone, flood events, etc., where you've got a reduced access which is dictated perhaps by local authorities. So the implications for this is not purely to do with COVID BI claims. We then move on to causation and insurers' position. Insurers placed a lot of reliance on the Orient Express case, which we'll come back to a little later. But the argument around Orient Express says that after Cyclone Katrina, so many businesses would have been closed down, whether or not the particular business was individually affected. The issue here is the widespread nature of the pandemic. Policyholders would have suffered the same or similar losses, even if the insured risk or the peril had not occurred and the policy's not responded. They put forward an argument saying a weighting approach, looking at case of disease occurring inside outside of a specified radius, and that was essentially rejected. Causation, the Supreme Court held where there are two proximate causes of loss, neither of which is excluded, but only one of which is insured. Insurers are liable for the loss. Effectively, it says that in the absence of an exclusion operating, the insured peril will dominate. So that's not moving away from existing case law. A but-for test was examined, and it was not always the appropriate test to apply in and of itself. It was inadequate in a number of respects. The court case, by the way, Supreme Court case, is worth reading, but heavy. The but-for test excludes cases where there's a series of events combined to produce a particular result, but none of the individual events was either necessary or sufficient to bring about the result by itself. So that's a bit more woolly, to my mind. Causation, the court also looked at disease and said was the disease clause could respond to cover losses resulting from the localised occurrence in combination with a wider pandemic. It's sufficient to prove the interruption was a result of government action taken in response to cases of disease which included at least one case within the geographical area, and it also looked at where there were equal causes in imposition of national measures. And there's some terminology there, following, arising from, as a result of, all seem to be irrelevant. So that causal chain discussion, you need to get your head around and try and see whether you really are reliant on that following, arising from, as a result of, and just trying to understand what the causation was here. There's also a look at the hybrid case, rejected the insurer's argument about the but-for tests, and it said, look, what do you think you're covering? You know, if you think you're actually covering prevention of access, and you're excluding it on a but-for, why are you writing insurance policy? Why are you taking premium? If insurance is restricted to particular consequences under an adverse event, other consequences of the event or the source should not restrict the scope. And the prevention of access or hybrid wordings indemnify the policyholder against the risk of all the elements of the insured peril in combination. There's cover regardless of whether the loss was concurrently caused by other uninsured, unexcluded consequences, which is the underlying cause. Pardon me. One of the big problems we are confronting in the claims that we're already looking at is understanding what the business would have done, and this comes back to a pretty standard other circumstances clause. Trends were argued in this case that insurers argued that because of the wider consequences of the COVID-19 pandemic, they would not be liable to indemnify policyholders for losses which would have arisen regardless of the operation of the insured peril at this location. This was roundly rejected based on the application of the but-for test, and in a similar fashion, the Supreme Court stated the trends clause should arrive at the results that would have been achieved but for the insured peril and circumstances arising out of similar or originating causes being all excluded. So effectively says the trends clause, you need to back out the whole of the COVID-19 effects, not just looking at the impact of this specific location. Standard turnover derived from previous trading is adjusted only to reflect circumstances which are unconnected with the insured peril and not circumstances that have the same underlying cause. The trends clause should only be used to exclude losses that are unrelated to the COVID-19 pandemic. This is really fundamental. This is where there's going to be a lot of rethinking of how we deal with business interruption claims. Fairly complex to get your head around. You probably need to talk to a BI specialist either when you're in your organisation, or talk to us or another of your suppliers who's got specialist accountants to talk about trends and other circumstances clauses. Losses arising prior to the operation of the policy, and this again goes to the trends section. The High Court held initially that there was a downturn in turnover business prior to the application of this individual circumstance. For example, if the COVID-19 effects already in force before the particular trigger for the policy, you could take account of them. The Supreme Court disagreed with them and said the Supreme Court's reasoning is that the trends or circumstances which adjustment may be made do not include trends or circumstances caused by the insured peril. So it's this thing again of you disregard the COVID-19 effects in doing your calculations. Now, some of the early claims we looked at in Australia where coverage existed, well, we had adjusted on a presumption of there was evidence of pre-incident trends. If this was agreed, if coverage or the policy response in Australia comes down to a similar judgment, certain of those claims we looked at for the trends just immediately pre-loss, we might need to go back and have a look at again. The indemnity can be calculated on what would have been earned had there been no COVID-19. So just need to reiterate this and reiterate the indemnities are calculated based on what would have been earned had there been no COVID-19. A minor diversion, but a pretty significant one here, is the Orient Express case. So after Cyclone Katrina in New Orleans, which I think is 2005, an insurer considered the extent of the business interruption loss that was suffered by a hotel there. I always get lots down because I always thought the Orient Express was a train that ran from Paris to somewhere or other, and they apparently own hotels. The insured owned this hotel. They had an all risks insurance policy on the place, and it was insured with a British policy form. The claims made for material damage and business interruption losses. Insurer accepted all the physical damage, that was fine, but denied the claim for business interruption, arguing that even if they had held the doors open, there would be no business for them. They would have suffered the same losses even if the building had not been damaged because of severe damage to an evacuation of the city. Now, this has been a real problem case. The way in which the matter was decided, it was an arbitration, and then there was an appeal from arbitration. There were a variety of practical issues associated with it, and also the concern that it didn't offer a good legal precedent. So it's been the cause of a lot of debate between business interruption specialists over the last 10 years. And I don't think anybody in the industry has been 100% happy with the judgment and thought that it resulted in an unfair assessment of loss. So the High Court took a look at this and said it's misidentified the insured peril. It's not damage in the abstract, but it's actually damage caused by the covered fortuity. And I'll get you to go off and have a look at the dictionary of synonyms for fortuity, but it's basically the causation. The hurricane is the cause of the damage were an integral part of the insured peril, not separate or differentiable. And the argument that the High Court took was that the test should have been, but for the damage caused by the hurricanes, would loss have occurred. So it's disconnecting damage at the premises. It's sort of talking about damage at the coming from the peril. The more serious the fortuity, the less cover the policy provides for the consequence of damage. And the High Court said that seems ludicrous, that you insure for something, and the worse the damage, the less you actually get paid. The High Court would have reached a conclusion that the original Orient Express case was wrongly decided and declined to follow it. They weren't obliged to follow it because it was essentially a decision in a lower court. The Supreme Court went even further and decided that the case should be overruled because the basis of the Supreme Court's decision was about the business interruption arose because of both the insured peril and the uninsured peril. Loss therefore had two concurrent causes, each of which was sufficient to cause the loss, and neither cause satisfied the but-for test. So you can see there's a similarity to the trends issue we talked about, and these are interlinked. If losses covered by the uninsured concurrent cause are not excluded, losses caused by both are covered because they both arose from the same underlying event. Some other considerations that came out of the FCA test case: it's binding on those who are party to it, but not on other parties, although it provides authoritative guidance for the interpretation of policy wordings in the UK, and you would expect realistically that you'd be a brave insurer in the UK who didn't follow it. Whilst it has no legal standing locally in Australia, we've been disconnected for about 45 years now from the UK legal system, it would still be persuasive, and in the absence of a contrary sort of judgment here, we would expect to see a similar sort of conclusion, and this being persuasive. Whilst it's certainly a positive outcome for many policyholders, level of policy coverage is very much dependent on the specific policy wording, and we're now into a saga where insurers are debating what's going on. I've actually seen the filings on some of the points which are in debate, and I can't start to follow what they mean. Only specific wordings considered, therefore similar clauses would still require further consideration, as they're doing, and the case did not address all aspects or potential issues, including things like rental income, disease clauses, accounting for government assistance, and the issues that are being examined are similar to those we're seeing in Australia. Now, Ireland. My mother-in-law was Irish, so I can fully understand this. Major economic impact in Ireland is associated with pubs, and 4 pubs took a test case against the insurer FBD, which insures about 85% of pubs in Ireland. The impact was felt for 1,100 pubs across the country. I've actually tried to find the individual case reference, but they just keep all the case citations refer to FBD and pubs. Causation was interpreted quite broadly and not requiring direct causal chain from the outbreak within 25 miles. Insured peril was concluded as composite peril, triggering the operation of the policy, very similar to the UK matter. There's an outstanding issue which is not resolved where there's a partial closure, so it's in contrast to the UK where partial closures is now concluded to actually trigger operation as well. There's then a counterfactual disaggregation. The argument essentially is that you need to look at the overall impact, not isolating it away from the COVID effects at the individual pub. And likewise, the issues on trends arrived at approximately similar conclusions. Court found against FBT, holding that one must exclude the effects of the insured peril from the calculation of the trend. Whilst slow days could form part of the comparative period for the purpose of conduct calculation, they could not be carried forward as a trend for the duration of the insured peril. A couple of other things: indemnity period. The plaintiffs that could argue the claim can be maintained even after the premises reopened. In the UK, they basically said once you reopen the door, the impact should cease. Regulatory, central bank basically endorsed the decision. They're the equivalent of the FCA in Ireland, and also sort of play a role approximately similar to ASIC here. There was a sort of a point made by the central bank that insurers should consider not only implications of judgment, but also the central bank's expectations regarding engagement with customers. And there's an echo of this, which we'll come back to at the very end of this presentation, and the warning for Australia. 3 significant cases in Australia. Test case number 1, most of you are familiar with. We did an examination in March last year. I looked at 100 commercial policies that we'd handled in Q1 of 2020. 49 of those referred to the Quarantine Act 1908, 24 referred to the Biosecurity Act 2015, and 7 referenced both acts. There are also, I think, about 10 which don't mention either of the acts. Accordingly, about 60% of the policies we examined had an exposure to relying on an exclusion which depended upon an act which had been cancelled. The case was run in New South Wales Supreme Court, but leapfrogged immediately to New South Wales Court of Appeal was recognised as significant. Insurers lost 5-0, so 5 judges said no, and they took a pretty black letter interpretation, saying the terms of the policy contained an infectious disease extension that did not exclude listed human diseases under the Biosecurity Act. The outcome of the decision is that those businesses holding policies were not updated. The insurer cannot rely on the exclusion. A significant drafting area for a lot of insurers. The decision came down in December. Insurers losing 5-0. They've sought leave to appeal. Realistically, just doing it on the numbers, not looking at the individual merits, about 10% of applications for special leave to appeal are granted, and even excluding the people like the folk from the castle about the vibe of the thing. There are only get up at about 20% of them. If something goes to the High Court, overall over the last 10 years, you've got about a 50-50 chance of having a judgment overturned. So overall, there's about a 5 to 10% chance of the judgment in the New South Wales Court of Appeal being overturned at the High Court. If the High Court decides not to hear the appeal, insurers will not be able to rely on the Quarantine Act exclusion, and you're into an exercise of actually assessing the claims. Test case number 2, just as a diversion, there is also a case for Star Casino, which is running at the moment. I don't know the details of that, but it's believed to be significant dollars and have some big implications at the big end of town. The test case number 2 was subject to a management hearing or management directions hearing yesterday, and I don't know the outcome of that, but the items that are being pursued is trying to define disease, looking at the issue of proximity of an outbreak to a disease, prevention of access to premises due to a government mandate, and also a hybrid type wording. So you can see that the issues which are being examined in the Australia test case have a significant similarity to the UK and to a lesser extent to the Irish cases there. And so it's anybody's bet where they will go, but it's reasonable to expect that there may be similar arguments advances in the Irish and UK cases. The Insurance Council of Australia, and I direct you to their website, it's basically how's this going to apply to small business claims. They've outlined the process there. Once final rulings have been obtained from the courts, insurers are committed to applying the relevant principles in an efficient, transparent and consistent way when assessing claims. Just turning to a few practical issues, and I'll ask Damian Lawrence, who's actually been running quite a few of these. He's probably got more experience than I have at looking at these. We've seen a restricted number, but there is one insurer who sent us a large number of claims in New South Wales. We had expected in Australia and in the UK a significant surge in claims. Now, it's got a practical effect in that we have been building our team of accountants very heavily over the last 12 months. So I think we've added probably, I'm going to say about 10 accountants in the last 12 months. Unfortunately, recently lost a few, but it means that we've currently got a large team, which is larger than it was a year ago. And we had expected claims to start to come in probably from about June of last year. Progressively, that's gone out and out because the legal timeframes to actually do the to respond to, first of all, test case number 1, then test case number 2, the guidelines as to when we might start to see claims just keeps on edging out. The most recent firm comment we've had is that we would expect to see them maybe in Q4 of this year, although there is now some thought that we might not start to see cases until into 2022. So there is still some time to build capacity, build assessment capacity, build expertise. And then there's also been a need for us to work and figure out how we build this. I might turn over at this point to Damian, who can talk about some of the practical issues that we're confronting. But in essence, I'm going to tell you that the UK surge is not coming in at the speed that was expected. It's building slowly. There are a lot of claims. There are already issues arising, which I'll come back to after Damian. So over to you, Damian.
Hi there, everyone. As Graham says, I've sort of joined Crawford's having moved back from the UK prior to COVID-19 in January 2020. By luck, more than planning, I didn't know anything inside. I hadn't got any information from wherever it originated. So I kind of started out back at Crawford's running the New South Wales area, and very quickly we were engaged through the New South Wales assets, government-based assets cover, which is broader than the commercial insurers, and hence wasn't part of any of the legal test cases because their cover did not exclude it and they allowed for the business interruption claims to be dealt with. So we've had about 350 claims in total since April of 2020, which we are still managing through. And those claims have been split a ratio of about 75 that are long tail business interruption losses. So those that are linked to a premises that's been forced to close down or through government directives has had their ability to operate curtailed by the people movement, social distancing restrictions or capacity-based restrictions. In addition to that, there's been approximately 225 event-based claims, which are short tails. Now, these are large events where a number of individuals come in and pay tickets, and those events have either been cancelled or, again, because of capacity issues, have been curtailed. So as an example, we're probably looking at potentially 1% to 0.5% of the total volume of claims that could hit the Australian market. And so although I've had a team of, just to give you an idea, I've had a team of 6 people pretty much full time since April on these 350 claims. So yes, these claims are probably larger than the majority that we'll find in the marketplace because they are larger government assets with large people movements through them, things like museums, things like national stadiums, etc. So the exposure will be higher, but the main issues we've had is the capacity and the hours, both within the businesses themselves, the agencies themselves, and ourselves to manage and assess the claims. We've used the equivalent of portals and toolkits and models by standardizing things, because if it's an event claim and it's from a single location, the same data is available. So we've been able to smooth that. And so we think that's a key part to any of the responses to this. And whichever supplier's toolkit or model or multiple ones you use, that consistency will really assist the triage and speeding up the process of the size of the claim and assessing it. And especially with those third parties that you're dealing with from the insured or the agency, because they aren't experienced in providing and updating information for business interruption claims. And so that was our biggest hurdle. Now, I think that hurdle was made worse by the fact that we got these claims through in April, which was in the middle of lockdown. So those parties that were assisting us in providing meaningful data to assess the losses couldn't go into the office, couldn't meet face to face, and therefore weren't always able to access the data as quickly or as efficiently as they would if they were able to engage with the finance director or the accounting team. So I think some areas of the restrictions and the barriers we saw in these claims will drop away because people are going back into the office and they are able to go back into the office. So it will speed up from that, but the additional volume is going to be a practical concern for all insurers, brokers, and all the suppliers that will be looking to assess these types of claims if and when they come through. I think the positives we've had is that the team has learned quickly, and so have the agencies or the insureds. We have a much streamlined process, and I think that is okay from the agencies because they're dealing with multiples. A lot of these insureds will be dealing with one claim only. So it's incumbent on the market, I think the insurance market, and us as stakeholders in the claims process to discuss some of the aspects which may not be in a test claim. And a good example of this is, what is the data that you will require as a minimum to get the claim moving? Because if each insurer and each loss adjuster and each party that's involved broker has a different determination of the appropriate data, it's going to cause confusion. So I don't know whether, I know it might not necessarily be part of the test case process, but it's good to start the engagement process on what is the minimum data. So how far back should turnover go? Do we just need turnover? I mean, I think there's three key pieces of data that we found most useful: historic pre and post incident turnover for a period of time, a profit and loss account that allows us to calculate meaningful rates of gross profit. And in the claims that we've been dealing with, there are multiple layers of gross profit because there are multiple income streams, but getting that data has been key. And then the same with the appropriate management and profit and loss accounts in order to consider and look at savings. That's what's enabled us to streamline the process. Once we've got the right, correct data, we can then ask for further data as we need to drive down into the assessment in a bit more detail, but it's allowed us to set reserves, it's allowed us to make interim payments and the like, whereas because these losses are long tail and ongoing, some of them are as big as 75 million and the lowest ones are around 20,000. That early stage has also allowed us to triage the claims into those buckets. Which ones are the difficult ones, which ones are the large ones, and which ones are the smaller ones? Because when you're dealing with one agency on 75 claims, that's what they wanted to know as well. So again, for the big pub chains that may have cover, it'll be working out, well, which are the prioritised of each of the venues that we want to look at from a size perspective. That triage process will be vital, and again, how you use the portals and the toolkits and the models is going to be vital for that triage process. I think the final sort of the piece that we've also found is in relation to the government assistance packages. And just to give you an idea, the team worked on this off the basis of a KPMG report that was done in about September of 2020. Now we found further government grants and business support that was available, and these are COVID specific. Different criteria for some of them, and the one that relates to the whole of Australia at the time was JobKeeper. Now, as we know, we have further packages that will benefit all the states now in terms of the discounted flights. So that could have implications for losses that might stem from airlines or from the tourism industry. The specific New South Wales sites that we're aware of from an agency perspective, such as camping grounds and holiday camps, we've seen over the 12-month period a zero loss. Now, of course, during the shutdown period, they suffered significant losses. But because of the international travel restrictions, and for a large portion of the year, the state travel restrictions, those campsites in New South Wales and those holiday parks that are state-based have seen a huge increase over the 12-month period. So those losses have been offset by gains. Now, whether or not they are COVID related, the referencing back from the state insurer is that we're looking at the big picture because the claim is a big picture. And it's been widely accepted by most of the businesses that are involved that over the 12 months, if they haven't suffered a loss, then they've pulled away from pushing their business interruption claims. Now, this isn't the case for all parties. Certain agencies are reliant on international travel, and what we'll see their losses continuing probably well into 2022. Now, our understanding from the insurers is that when the restrictions are eased, even if they continue to have a loss, they believe the policy will cease to pay them. Now, we haven't got confirmation on that, but that seems to be the model. Once there are no restrictions in place, then the policy will, and that will align very similarly with this agree or the process of the but-for test. The moment the policy restrictions are, or the covered loss restrictions are not in place, which is closure or reduced occupancy by government authorities, you can have stadiums at 100% and you do not need 2 square metre rules in boxes or in restaurant areas. Even if less people come to the particular event or game, the policy will no longer respond, which makes sense because then you're only looking at the uninsured portion of the loss. They're not running concurrently. So what we did find, as I say, is that all the government agencies weren't allowed to claim JobKeeper anyway. We know that JobKeeper and the government grants are not part, my understanding is, of the test case. Certain stakeholders within the claims area, Alan Manning, I think, is one of them, has raised this issue with ASICS as to why it's not part of the test case, because if we're not allowed as an insurer group to make an adjustment for COVID-19, which is where the Orient Express case looks like, then if that adjustment does not apply, and for the criteria to meet getting JobKeeper, you have to have a reduction in turnover, which insurers' policies will be backfilling, surely insurers should be entitled to the benefits of those grants that are linked to that reduction in turnover. As it's not part of the test case, my guess is the first claims that do come through could raise a problem which won't have been directed. One point that I have also seen is that we've still seen a low volume of claims. We think that's because the test case is going on, but I've had some interesting insights talking to some parties within the Australian market, which is only been evidenced now with some of the JobKeeper audits. What could have happened for some smaller businesses is that they've received the JobKeeper at whatever rate it was for their part-time employees. They've taken the $1,500, which I think it was for the 2 weeks period. If an employee is only paid $500 and they've only passed that $500 on and retained the $1,000, then to avoid scrutiny from an audit by reviewing quantum of a business interruption claim, they may be dissuaded from claiming a business interruption claim if they haven't had an audit by the ATO. Now, I know that's subjective, and I know that's, but it's plausible because there are cases that they're finding now they're doing the audits where this has happened, and it is predominantly to SMA businesses who may not have understood the policy, the process appropriately because the admin side of it's particularly large, but it's also possible that they've kept the employee happy, here's your wages, and the difference has potentially been pocketed, which would more than cover some of the smaller claims for a cafe or a restaurant where they've got 5 casual members of staff, because each fortnight that's $5,000 in that example that I just gave. So that's the insights that we've had around doing this, and I would say we are still dealing with these claims, and that is for only 350, and that's 6 members of staff who've probably been averaging since April 30 to 35 hours a week on just these COVID BI claims through the government agencies. So I think I'll pass back to Graham to conclude this piece, because we're nearly out of time anyway, and welcome some questions if we have got enough time for them.
Thanks very much. I hope that my voice is now getting through. there's a sort of certain inevitability. Jane Clifton, the Melbourne comedian, had this story about the perpetual newspaper. So she said that it was possible in Melbourne to write the perpetual newspaper. Those of you in Melbourne will appreciate that Collingwood star in fracas with police. Ricky Nixon arrested for XYZ, and Essendon's grand final hopes fade mid-season could be a perpetual newspaper. In the UK at the moment, the insurers' response to COVID-19 claims is achieving the perpetual newspaper status. And if you want some entertainment, have a look at the last few weeks' Sunday Times. It's a good representative place. And there's one, unfortunately, insurer is very much in the frame because they were obligated to make offers to 450 members of the class who had pursued them through the courts. And at the end of February, when 450 assessments were supposed to have been made, only 33 had. I've got to say, so there's some relief from my colleagues in the UK that it wasn't us who was doing the assessments, although we've now been asked to dive and help to untangle the mess. But I have considerable sympathy with colleagues at another firm who are caught up in that, and the insurer. But this gives a hint of where you can virtually expect the place to go. Now, the Financial Conduct Authority in the UK had set out their expectations. I also pointed out earlier the Bank of Ireland's expectations that they conveyed. ASIC in Australia were a bit more upfront about it, and there will be a few people in this session who have received a copy of this letter. It went to the Directors of General Insurers, Lloyd's, cover holders, and general insurance brokers. So an awful lot of people have received this letter. So the first letter went out on 27th of April 2020, setting out expectations of general insurers when responding to COVID-19 cases. They followed up with this letter, which is pretty much putting the frighteners on and saying, hello, boys, you better be ready to, or boys and girls, I suppose, you'd better be ready to respond. We remind general insurers about their duty to handle insurance claims with utmost good faith. The purpose of this letter is to specifically focus on the handling of claims on business interruption insurance policies by small business policyholders. It then goes on through a variety of other specific points, but in conclusion, we expect that you as directors will seek ongoing confirmation through board reporting that your firm's approach to business interruption insurance claims by small business policyholders is consistent with the approach outlined in this letter. So in essence, ASIC is sitting up and warning you up front of your obligations. And we've had a lot of approaches from insurers recently looking at what we're doing. We're seeing those approaches as being very positive. I know that our competitors were also commenting that they're seeing approaches from insurers, so it's positive that people are thinking about the risk. There is a concern to my mind that a lot of people are looking to use toolkit type things. We have probably the best developed toolkit. It probably, at the front end of it, is probably not as sexy looking as some of the competitors, but we've spent about 10 years now developing a toolkit for assessment of losses. And right place, right time, it's excellent, but it's no substitute for the technical skill of actually looking at claims. Useful for triage type operations. My recommendation is that insurers need to be looking at each of their policies and thinking of the exposures and thinking through scenarios, putting in a few scenarios, having a chat to your suppliers about the sort of experiences that they're seeing already, the comments that Damian has made there, the stuff that we're starting to see from our UK colleagues who, it's very early days and there's a slow uptake. We had anticipated, I got a request at Christmas time whether we could service 10,000 claims for our UK colleagues. I said I thought that we could probably handle 1,000 by scaling up in the short term so that we could provide coverage to the UK. It would also provide training, well, it will provide training opportunities for us because we're expecting that surge of claims in Australia is going to come in probably about a year after the surge in the UK. So it provides us an opportunity to continue to grow our business and grow out our expertise. I think there's a significant issue for training and making sure that staff are well briefed on how to deal with business interruption claims. Historically, there is a comparatively low level of business interruption knowledge within insurers, and you will find that in the claims department there might be 2 or 3 people who specialise in BI claims, and a lot of people who've got that sort of knowledge which says, I will pass it off to somebody else. The question marks as to how insurers are going to triage. As I said, their standardised models are useful, but they're not the answer in themselves. And it's going to be an interesting time for us in the year or well, it's going to be years ahead now. There's sort of a variety of responses. We're not the only ones that are looking to build our teams. As I said, we've just had several very good people poached to go elsewhere. We put in place arrangements with chartered accounting firms to provide us with assistance with us managing the insurance part of it and using them to do analytical work. But there's a lot of work still to go on it. I think at this point we sort of roll over to some questions, and I already have a couple of questions that have come in from an insurer. I just need to figure out how to recover things. One moment.
I've got those here, Graham, if you need some prompt. One about deductibles. How many should apply given there are stop-start periods, given the restrictions over a fair period of time?
Well, it's actually a bit problematic. If you think about the situation in my home state of Victoria, we've had 2 substantial lockdowns and a short period lockdown. So even on that, would we be applying 3 deductibles or a single deductible? I think that's going to be a judgment for each individual insurers. You need to think that the majority of business interruption policies may not be subject to a deductible. So you may find that there is not a deductible applying under a lot of policies, but we'll be taking instructions from insurers as to the number of deductibles that they wish to apply. But in general, I think the flavour is probably going to be that a single deductible would be sort of de facto probably the preferred outcome.
All right. What impact would the Property Law Act in Victoria have on the ability to rely on the expired Quarantine Act?
I'm glad to say that I'm not a lawyer, so I'm ducking that one. But I doubt that it's going to be much on it. But I'd recommend that somebody have a chat to a lawyer on that.
All right, and another one relating to the level of compliance with the court rulings. Have all insurers agreed to be bound by the court rulings as per the ICA statement? Vero seems to be one example of an insurer indicating they will not, and claims will be assessed on a case-by-case basis.
I'm not aware of who's opting out of it. My understanding was that it was a general intention to roll along with the ICA's approach, although I could understand why some insurers may wish to adopt a different course. I think there is a reputational hazard. The item that I just showed from the Sunday Times. I think that some people are likely to have regard to what the impact would be on reputation for that.
And the UK courts didn't deal with an outbreak, just an occurrence. So can we separate the two, and can you talk to that point, Graham?
I think the concept or the split of it is the sort of occurrence. It implies a single or identifiable thing, whereas an outbreak, to my understanding from it, when I read this, the thing was an outbreak was effectively continued infection. But the UK court case talks about an occurrence, so it's very much looking at a single one-off thing rather than a spreading disease. So in Victoria, for example, we had a sort of series of spotting things where you'd only get one, whereas you would have an outbreak in a hotel, quarantine hotel, or the like. So applying plain English, that seemed to be the split that was given there.
All right. We know AICW is often the tipping bucket for ambit loss heads of claims. What kind of weird and wonderful items is the UK seeing? And this questioner is particularly interested in financing and overdraft costs incurred by businesses who can't service their finance facilities, and also the cost of ongoing heightened cleaning.
So I can talk to that if you want, Graham.
Yeah.
And what we've seen so far is there has been increased costs associated with additional cleaning and also additional equipment. So most of you have seen a hell of a lot of stickers in lifts and in things to tell you how far apart you need to be. A hell of a lot of hand sanitizers now going in, and also at certain tills for a period of time, those big screens that stopped you being able to breathe on each other when you bought something. So far, the local insurers that we've been dealing with from the state perspective has accepted those costs as reasonable and necessary under the definition, because they've resulted in a mitigation of the losses, because without them, they couldn't be deemed to be a COVID safe environment, and therefore they couldn't have traded anyway. So that's why I think they've been accepted, because it's resulted in significantly greater value of turnover. But certain aspects of the claims where they've pushed the boundaries is certain agencies didn't have laptop computers, everybody had desktops. So they tried to put through 2,000 laptops for everybody now having to work from home. Now that's where they started to draw a line saying, well, it's a more of a commercial decision. Plus you'd have a hell of a lot of residual value, etc. So that's where we've seen the splits. But 2,000 laptops is a fairly sizable cost to suddenly dump on the insurer, and I think the same sort of logic would apply, subject to the sublimits that are within the policy.
Thank you, Damian. Another one regarding legal and advocacy costs in claims presentation. One insurer is seeing the usual circling of claims advocates and now mainstream as well as plaintiff firms to sign up customers and present their BI claims for them. What is the appropriate policy response for such legal and or contingency-based fees?
In general, the cover which is available under business interruption policies in Australia extends to cover claims for the cost of preparation of the claim, often restricted to fairly narrow terms. So it's the cost of preparing the claim, it's not cost for advocacy. And one of the recurring issues that we have is actually going through and isolating costs which are associated with advocacy. It would be rare that an insurer would pick up legal costs associated with advancing a claim. One of our concerns, and this is sort of broader than this specific issue now, is the appearance of claims preparers who are applying contingency fees and claiming both from the insurer for the claims preparation costs and also entering into side-by-side agreements with insurers where if they're successfully increasing the claim above some nominated value, they will share in the increased profit or increased revenue that's achieved. So we have a concern that that's an emerging trend for a couple of parties. But the cover in general under business interruption policies is fairly limited to claims preparation costs only.
And that tends to be a sublimit as well. So whether they enter into it or not, if the costs are over the sublimit, you wouldn't be able to obtain it in any event.
Yeah. Under a lot of biz packs and the like the cover is fairly restricted, $5,000, $10,000, $25,000 are typical limits there, and some of these operators could do very nicely out of it, but they're going to be taking money away from the policyholder. What's an interesting development, and I'll qualify this, that the core of my business in recent years has been around class action work, and it's interesting to see that there are a couple of lawyers out there seeking to run class actions but at a point where insurers haven't even had the chance to have a look at the policy or look at a claim in the first place. Brokers have been talking about the low frequency of insureds actually submitting claims to date. There's been quite a suggestion to hold back, but they are starting to see some. Some of them are actually extremely large. I was talking to a broker at a very large insurer yesterday who said they're starting to see claims coming through in the tens of millions of dollars, which we'd not previously been hearing about. So there's been a holdback. We're starting to see these claims coming in with indications of fairly large dollar value on them. So one of the issues is going to be identifying how to split those out and how to focus attention on those big ones. There was also a question mark about whether we are getting conflicting positions from different insurers, and I think the issue just flagged there about whether all the insurers are lining up to sort of follow on a similar course. We find, and this is not restricted to this circumstance, that we will frequently receive different instructions for apparently similar policies, and we see some variation between offices of insurers to a similar circumstance, or between different insurers. And you would expect that, you know, in an industry where we don't necessarily talk a lot together, and there's competitive reasons why, that there will be a divergence in opinions there. And some of the decisions that are being taken are being driven by financial consequences. We saw it in the UK that an insurer who had a fairly restricted exposure to COVID BI has gone, okay, well, we're just going to get on and deal with the claims quick smart. We're not going to worry about the appeals process or anything else. We're just going to get on and deal with the claims, because we reckon that business-wise, there's not a lot of mileage for us in having our name up in the Sunday Times or whatever. And so we're expecting that we will see some divergence by insurers around what their expectations are.
All right, look, one last one, Graham, and it's back on the topic of the government grants. Do the government grants not assist businesses in their costs to be COVID safe?
Yes, there is some of that. Although most of the grants have been have been targeted at a revenue side of things, not necessarily on helping them to put in place, you know, screens, increased hand sanitisation, etc. There's a perverse outcome of this, which is that a remarkable number of businesses are telling us they haven't done too badly out of COVID-19. And I'll give three small examples here. I had my carpets cleaned recently at home. So I said to the carpet cleaner, so how are you tracking? He said, oh, look, you know, through lockdowns, the government JobKeeper stuff was extremely helpful, but I still had corporate businesses, and they actually saw an increased frequency of carpet cleaning. So I was doing less domestic but more commercial cleaning. Post lockdown, I've got this huge backlog of work, so I've had to actually take on additional labour. So he said, you know, in the scheme of things, I'm actually better. I'm ahead for the full year. I was in Lakes Entrance, and it's a holiday town in Gippsland, 300 kilometres from Melbourne. I went into an auto parts place, and I said to the guy, how are you doing there? And he said, well, it's actually been my best year ever. I said, well, how did that pan out? He said, well, normally in the Lakes Entrance, a lot of our people would actually go travelling in winter and would go overseas and what have you. So they've stayed at home, and they've been doing up old cars and the like. So I've actually had my best year ever. And a lot of the restaurants and takeaway food places that we're talking to are saying, okay, well, we had a transfer of trade. We weren't doing in-house dining, but we were doing takeout. And the turnover's been good, and we haven't had to staff for the actual floor. So we haven't had labour for things, so we haven't done too badly. So there are a remarkable number of businesses that have done quite nicely. And when we go to do some of the calculations and look at the numbers, it's coming back at times. I've got a request from a broker to go and talk, because we've done the numbers on what on the face of it would have been a fairly substantial impact. But when we actually run the numbers, we discovered that the business had done quite nicely through COVID. So the problem of going to an insured and saying, well, actually, when we've done the numbers, we've only got a very small loss here. I think it was about $10,000, when on the face of it, we would have been expecting something like $50,000 to $70,000.
And look, I can add to that is I think it'll be a geographic. Those suburbs where people come into cities and are now working from home, places in New South Wales that I know of, Northern Beaches before the lockdown, the cafes and restaurants and places around there, some of them have trebled their turnover. But where you won't see that is the centre CBD areas where people are no longer wanting to travel in. I think those businesses will still have been hit hard. And given that the Orient Express case doesn't look like your insurers will be able to use the but-for test in the same way, then I think you'll find that that's where the concentration of the shortfalls are, especially in Victoria, but and in Melbourne. But those suburbs where the cafes, people have then stayed at home working, they've gone out and they bought their lunch or a coffee more locally at the expense of the cities. I think you'll see a different spread of how the losses are formulated.
Yeah. Now, I also see a question which is our views on collecting information prior to the court case outcome. I think the point that Damian was making before of trying to work out what information you're going to need to assess the claims, and the core of it is trying to get turnover information and accounts pre and post loss if you can. The toolkit that we've developed is actually quite good in producing a document request list, but it's actually a bit too hard for a lot of policy holders. So it's a bit of a challenge, and just trying to work out, it's conversations you need to have with your suppliers, your loss adjusting suppliers, to understand the information that you're going to need to assess claims, and whether there's a threshold for you as to how complex you want to make the matter. One thought is that if we can get turnover information to identify what loss in turnover is, we've actually got, through our toolkit, the ability to look at standardised rates of gross profit, which the ATO collects, and whether we do an exercise of working out small turnover losses to be just use a standardised rate of gross profit. There's a variety of questions like that we can have a chat to you about. If you've got questions coming from this, if you've got key account managers at Crawford and Company, can you come back through them, or alternatively get in touch with either Damian or myself. You'll see on the final page of the presentation, which I've emailed all of the addressees on my address list. You'll see there's contact details there for myself and Damian. And it's very much a case of we've still got quite a while to run before significant case numbers are expected to sort of flow through. So there's quite a lot of time to plan, but it will creep up on us quick smart. We've been planning since March last year, and the plan of how we're going to attack this has sort of moved around quite a bit over that time, and I suspect it's still going to move quite a lot further. I'd like to say thank you very much to all the attendees today, and the questions we received have been really helpful. When I sent this out, I noted that I sort of felt like I was sort of going out on a tightrope because we're very much into an area of uncertainty. Usually I go into talking about topics being absolutely full bottle on them. On this occasion, I actually think that there's still an awful lot to learn, and we're still feeling our way. So I don't think anybody should be holding themselves out as an absolute expert. We're trying hard, but we've still got a long way to go. So thank you very much for today.